Hey, welcome to the closing beat, everybody. Happy Monday to you. How you doing out there? We are financial advisors here at JazzWealth. We are wealth managers here at JazzWealth. We focus on anything and everything that happens to affect your dough, but we do focus on long-term retirement investments as a primary focus and then work our way back from there. You ever notice that? Any planner that's like, okay, let's figure out a plan. Always start with what's in the furthest future that you can, usually retirement or some kind of legacy giving, and then work your way back. That's how you do it, and that's what we do here. So hope you'll check us out at jazzwealth.com. All right, as far as the stock market goes today, well, we have had 6 straight weeks of gains. I'm sure you've seen those headlines. That's nothing new. Will we get number 7? Well, this morning we were not so excited to continue that. If you look at a 5-minute chart, here's the beginning of the market right there. Started off with a little bit of a rally, and the European markets actually being weaker at the close took us down throughout the day. We've been trying to recover a little bit throughout the day, but it's just not going well. And the title, of course, today is why earnings will be the driver of your retirement accounts this week, right? If you see volatility this week, it's going to be earnings related. Jazz After Dark, we covered a lot of the news, the China news, the Taiwan news. China's getting weaker by the day over there, and it's not being reported. It's something I kind of find fascinating, but getting weaker by the day. We have the elections coming up. We've got, is inflation? Is there no inflation? Blah, 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 all this stuff. We got earnings and all kinds of good things happening. Good things. Anyways, over in China, the 1-year prime rate, they lowered to 3.10. That was from like 3.35. So a decent sized move for them. And remember, they continue to try to find ways to take the bad debt off the state banks and put it into the PBOC, the People's Bank of China, which is like the Fed over there. And that's a big deal. Imagine in the States here, if our Federal Reserve was saying, hey, JP Morgan, Citigroup, all these people, you have bad debt and it's going to get worse. We'll take it. Give it to us so that your balance sheets look better and you look like a stronger bank. That's what's happening over there, and we're just not talking about it. Anyways, I'm talking about it. Hey, just for a little fun, did you know that this weekend was the 37th anniversary of Black Monday? Remember Black Monday? That is, it was 1987. It is officially still the largest one-day drop in the U.S. stock market, or in the S&P. It was over 20% just in one day. Not quite 21%, but 20%. If you want to find the second worst, I had to look it up just for fun there. The next closest was 12% in 1953. Happy anniversary. Hey, anyways, as a side investing note here before we get to everything, there's a good stat. You're going to like this one. Any day in the stock market that has a greater than 5% drop. Now, I get it that there's some circuit breakers and things these days, but we could still have a 5% drop. If you look back at all of those events, I believe there were 35 of them in total, the best statistic of any statistic out there, the closest to perfection you can get, is that if you bought the day after a 5% drop in one day, then 85.17% of the time, you would have an average gain of 25% over the next year. And hopefully that comes back. There we go. It's all good. So statistically, the best buying stat that there is in the market is when we have a 5% down day. That's easier said than done. Yeah, what I'm talking about there. So I just thought I'd share that with you because everybody's always asking for stats and everything. So there you go. Hey, if we look at the S&P here, we have 6 straight weeks up. We're in the 3rd year of our bull market rally. We'll cover that on Jazz After Dark tonight. But we also have 52, let's call it 53% of stocks in the S&P are overbought. That doesn't sound like a lot, but historically the S&P doesn't like to have much more than that of overbought stocks before those stocks start to pull back. Now, don't think of this as, oh, well, therefore the market will fall. It's a little different this time, actually. So now what we have is almost every stock in the utility sector is overbought. Well, if those fall, it wouldn't actually make the market fall because the utility sector is less than 2% weighting of the entire S&P. A little bit different there. However, in terms of getting some volatility, this week, you're going to get it. There's over 100 S&P names reporting, and we get a glimpse into almost every single area of the market. We already got the financials. We got to look at that. And I want to just show this to you here real quick. So Tesla, right, is going to be one of the bigger names. We're looking for a continuation in the growth of deliveries. Remember, that was sort of stalled out last time and coming back to normal. So expect a lot of volatility out of that. Now, if we go around to all the stocks reporting, I'm going to group them here. So we got Coca-Cola, Thermo Fisher, T-Mobile, IBM. See how they're all different here. Coke would be the most interesting from a consumer economic standpoint. Are we changing our habits of drinking Coke? I don't think so, but it's kind of an interesting look into early spending changes of the consumer if there are some troubles there, and that's what happens. You got Sherwin-Williams coming up. That's a proxy for the housing market, but I should point out that NVR is also reporting there, and Pulte Homes. So we'll get a look at new homes, the not home construction, but new home construction, and then sort of our remodel, fix it up, paint the house kind of thing. So for Sherwin-Williams. We then have General Electric, Lockheed Martin, and Raytheon. So that's a look into aerospace and the defense sector. We have Union Pacific and UPS, United Parcel Service there. So that's a look into the transports and kind of the transports of goods. UPS is kind of an economic barometer as well. And then we have Capital One, which is our last look into the consumer credit health there. So we have a slew of earnings that will give us a look at the economy, the US stock market. And that's why I say that this week will be an earnings-driven performance, good or bad, in your retirement portfolios and things like that. So just a little heads up. As we look around, the NASDAQ down just a little bit for the day. The Dow was down, gets the biggest news because it's the biggest number there. 300 points, we're down, whatever. The Russell 2000 took it the worst. However, it's still working on deciding whether it's going to break out or not. It has every opportunity to, and this doesn't mean that it's going to fall apart. We have a series of higher lows here and a series of equal highs. So that means we're building pressure, hopefully, to break out above and get things going there. Crude oil higher today. Well, that's not good news if you like the idea of a 7-week streak in the S&P. We don't like to see crude oil higher. We also don't like to see what? Bond yields higher. What in the world is going on there, man? Weren't rates supposed to fall? The Federal Reserve cuts rates. Where's the rate cuts? You want to see something fun? Check this out. Here is the day that the Fed cut rates. And on the screen, what I'm showing is the actual 10-year Treasury rate. Pay no mind to this. This is just messed up. No need for that. So here is the day that they cut rates. Rates have only gone up since then. In fact, 15 of the 23 days that there has been since the Fed cut rates by half a point there, rates have been higher. That's a little bit different, right? So we went all the way back to 1994, which is the first time, it's the data point where you start for if you want to run any sort of scenario against the Fed, because it's the first time that they actually would announce their decision on Fed Day when they would do they didn't always do the conference, but it's the first time they would actually announce their decision, set a schedule, and went around doing it that way. So you got to go back to 1994. If you do that, you have 35 rate cuts. Okay. Somebody said, well, if we look back over 35 rate cuts, what happened 23 days, trading days, after? Because we're 23, this will be 23 full trading days later. 15 of the 23 days were higher. It was okay, let's go to every single rate cut since then, go out 23 days and see what the move is. The median move is a decline of 3 basis points. In other words, 0.03%. So over the long run, rate cuts didn't actually cause rates to move lower, although like that much, so basically they were flat. What does that tell you? Well, it tells you that we now have a very forward-thinking and telegraphed Fed, right? So forward-thinking investors telegraphing Fed. The Fed starts telegraphing that they may be interested in cutting rates sooner, so rates fell ahead of time. They are now normalizing back to where they probably should have been in the first place because they were anticipating greater than a 50 basis point rate cut by this moment right here. It did not happen. We only got a 50 basis point cut, and so that's probably the best example of probably the best explanation I can give for that one there. Hey, we have gold. Pretty impressive run here with gold here. This is, if it closes up there, well, the cash market closed already. So that would be 43 closes at record highs there. That's the second most in history. You got to go back to 1979 to find 57 closes at record highs. Now, there are only 49 days left in the year, so could we break that record? Yeah, technically, there's plenty of time. It would be rare for that to happen. However, just know 57 closes at record highs is the absolute record. Oh, I want to point out too, you look at gold, but look at gold miners. actually enjoying gains that are greater than the returns of gold. The gold miners are kind of like the utilities lately, just a sneaky little area. The stocks that we own in our portfolios that are gold related or silver related, killing it. Yeah, we're not complaining. It's like the utilities. Every time you break out our portfolios, I go, what is happening over here? Look at utilities going and going and going. Well, gold miners are the same way if that's something that interests you. All right, other than that, we've got stocks in the news. You got Boeing moving a little bit higher here today. The Machinists Union will be voting on a new contract that could potentially end the strike. They like this one. Obviously, investors like it as well. It's up 3% on the day. I think people would like to see that put behind them. Not a big deal, but I thought it was kind of cool. If you look them up, the U.S. Army is asking Microsoft to lower the prices of those goggle glass that they have. I just thought it was cool. Look those things up. It's pretty interesting. Probably the bigger move and biggest move actually ever in the history of Spirit Airlines today with a 52% gain. They have, they're trying to refinance they're trying to stay alive, really. But they're trying to refinance some debt. They were asking for an extension on that. They did get the extension by 2 months, and Spirit Airlines says, hey, because of that and everything else we're doing, we will now expect to have $1 billion in liquidity, not cash, liquidity by the end of the year. So, I hope they make it. Kind of a fun airline, if you like that sort of thing. The city bus of the skies, as they say, but I don't mind it. Sirius XM here. Warren Buffett's company bought 1.6 million shares. Just keep in mind, it's $44 million. It's not a big purchase for them. They're just dipping their toe in the water, likely to see what they can make out of it in the future. And it was not Warren Buffett that bought it, of course. Texas Instruments, here's a fun one. They report tomorrow. Now think about this. It has moved somewhat to the lower end of the range. It is down numerous days in a row here, right? They report after the close tomorrow, and they have seen the stock fall on earnings. Right here. They have seen the stock fall on earnings day the last 6 times in a row, right? Is that going to happen again? Are you a contrarian? Huh? Is that something? And then you got Comcast also moving lower here as well. They are on a 4 streak of wins. So the last 4 times they reported earnings, they'll report in the morning, by the way. They report in the morning. They have been positive 4 times in a row on earnings day there. So thought that might be something cool you want to take a look at. We've got a ton of earnings to look at. It's probably how we're going to spend the rest of the week, is just focus on earnings. If you like looking at that stuff or have any questions, of course, leave comments down below. I really appreciate you guys watching. I know the hurricanes have messed us up here with our schedule, but we're back. We're doing good. So we will continue doing that, and I will see you guys tomorrow. Adios.